Welcome back. You're watching Opening Moves. You've got about 0.3% cut on the Sensex and the Nifty right now, 53.74 on the Nifty. Let's get into specific earnings. We had Blue Star reporting numbers which were actually a little bit disappointing. Net sales were up about 6% but net profit came down by 28%, and there was also a contraction on the EBITDA margin which came down to about 11.2% versus 13%. The management is joining us with some clarity into what's going on in business. Satish Jamdar is Managing Director at Blue Star. Good morning, sir. Thanks so much for joining us. You want to just run us through the profitability side, what sort of brought in the pressure?
Yes, good morning, Ira and Prashant. Yeah. The results actually, yeah, they're disappointing. You said it right. I think you need to get a little bit into the background. I look at the whole year result rather than the quarter only because, as I said earlier also, our business is a little skewed. There's seasonal factor. They're also end of the quarter. And so a large quarter in the fourth and the first. So you look at the whole year as one, I think it makes more sense to analyze it. So my take is we grew 14%, but the margins affected us. So our EBITDA and PBT is low. The PAT is lower because our tax rate has gone up. Last year, our Himachal plant completed 5 years where the 10% tax holiday ended. I'll come to that. I'll just come to all the steps that we plan to take now, are taking already. And then the interest cost went up due to capital employed going up. Two reasons for that. One is we made some investments. One was a new company we acquired somewhere in August, September. The plumbing company to make ourselves a complete MEP company. And of course, we invested in a new factory in Himachal, a second plant, which came on stream in April. We did investment in R&D and a training center. So these are some other investments made for the long term. So that's the sort of overview of what happened. Coming to, if you look at the segment-wise...
So just wondering if you could help us with a more sort of, forward-looking indication of what business is looking like. For instance, if EBITDA margins have come down, do you think that that's going to continue? If raw material costs have gone up, do you see pressure on that continuing in the first quarter? The interest cost side, the tax rate side, are those items which then filter through into Q1 of the next fiscal year as well?
Yeah, so I think I need to, I need to explain that maybe one by one. Let me finish off the tax side because that's easier to finish off first. As I said, our tax rate went up, I think it's now 30% plus compared to about 23-24% last year. And essentially that came because our Himachal plant, which was commissioned in 95 or 96, finished 5 years last year. So the 100% tax rebate went away. We had plans to introduce a new factory last year, but due to the downturn, we deferred that, and we have actually commissioned a plant this year. And this year is the last year, the next 5-year window available now. So you wanted to maximize the next 5 years, and that's how this plant has come up. It's just come up in April, and we'll be investing a little more in making it a larger plant. That's one. The other thing which happened was we pushed on our R&D because we felt our products portfolio need to be expanded and we need in-house technology. So a lot of investment in R&D, and while doing that we also have gone in for an in-house R&D recognition which we got from the government just recently. So that will also allow us to spend our R&D spend to be with tax benefits. So I think these two should help us reduce our tax burden in the coming few years. It may not go back to the last year levels, but certainly will improve over what is there the last year we just ended. That's one. On the margin side, I think I mentioned in our note some time back that we looked at our pricing. Where there's pricing power, we have indeed increased our prices, improved our margin the second half. Last year also, remember that our first half was 25% growth on the top line. It's actually the second half which slowed down about 5% level, so we are overall 14%. And you're asking me how the quarter one of this year looks. Inflation factors are slightly steadier, but they're still there. The GDP, people are talking of whether it'll be 8% or 9% or less than that. We don't know, but we're just preparing for all eventualities. My guess is that On the product side, segment 2 and 3 we should grow. Segment 1, we had a problem last year where our growth stopped in the second half because we found that cash flow in our project side wasn't moving from the customer, and we didn't want to get into more debtors. And the velocity of billing slowed down because the customer sites, I think, started moving slower. Now, because segment 1 is dependent on construction, telecom, etc. Now, I have a feeling that as the year progresses, things will start improving. That's my personal and our internal feeling. And so we have planned for improvements in this year. More important, we've taken steps for the long term. That's what we've been doing for the last year or two when the slowdown started. We'll be preparing for how the company will be prepared for the growth cycle that should start soon. Everyone is talking about India being maybe overtaking China, the growth rate. I mean, whatever it is, it's still the second fastest growing economy right now. So we're preparing for that. A lot of investment on R&D.
I have to interrupt you there.
Yeah, please.
I got that.
Modernizing.
Right, we got that, sir. I've got to interrupt you there. Just a very quick point. You know, we are all talking about FDI and retail, about investment and back end towards that, etc., etc. We don't know when that's going to happen, but expectations are it's going to come about soon. You're into commercial refrigeration, etc. That, I believe, constitutes a growing chunk of your business. Just talk about that. How large an opportunity will that be? I know it's unknown as to what the contours of that will be about FDI and retail and what these companies will need to do. But expectation is that they'll have to invest a lot in the back end, refrigeration, etc. Is that a large opportunity? Something that you see on the horizon, you're planning for, you think will be big?
Yes, Prashant, we are actually very involved in the cold chain program. You know, we've been talking of the cold chain growing, I think, for the last 3, 4, 5 years now. But as a company, we are well placed here. I think, if I may say so, we are perhaps the best suited to offer the cold storage with technology, and we are already involved in the cold chain program with the government, with the states. It's dependent, though, on how soon perhaps the retail side picks up, because without the retail happening, I think the cold chain will have a bit of problem in growing. But our refrigeration business actually has grown extremely well in the last 2 years. And I see it continuing to grow because it's a very nascent business in India. Just like the air conditioning took off maybe 10 years back, I think I see refrigeration growing now. And we are very well positioned, perhaps the market leader in this area, in our cold rooms and the solution that we are offering, larger projects. We also started doing, you know, beyond just the cold room, grading, separation of different kind of fruit, flowers, and you know, horticulture, including seed storage, which we invented a new machine that would control humidity and temperature. So many things that we are actually investing here. Yeah.
Okay.
So I think
Okay.
maybe a little slower than
Okay. But interesting nevertheless, large opportunity for you. You're saying you're the best placed in the industry to take advantage of that. Thanks very much, sir, indeed, for joining us here on the show. Would love to get you, you know, on a focused discussion on that particular point. FDI and retail, what does it do, not just for retail companies, for some of the allied industries as well. Take that break, come back in 2 minutes.